Hello, everyone. It's great to meet you all. My name is Elodie, and I'm Chief Operating Officer at Kaiko. It's been a pleasure to host you most of the day and continue a bit later this afternoon and tonight for the cocktail in this beautiful setup. I'm extremely pleased to welcome two amazing speakers on stage for a fireside chat. So we'll have Aave's CEO and founder, Stani Kulechov, and Spartan Group's partner and co-founder, Casper Johansen. Please join me on stage.
Hey everybody, thanks for joining. Stani, thanks for joining today.
Really glad to be here.
So, big day yesterday with the V4 announcement. Congrats on that. And you said it's just the beginning, so I'm looking forward to unpacking what that means today. But maybe just for the benefit of the audience, if you could give a high-level overview of like what is V4 and what are the big changes versus the V3 that most people will be familiar with?
Yeah, I mean, it has been a big day yesterday, particularly because of the Aave V4 launch, and it's been a significant undertaking for the Aave Labs team. We've been working on the project for the past couple of years, and launching something really like a protocol is definitely one of the hardest things to do. And obviously we have a really great team that has been working on that heads down for a very long time. And I mean, for Aave's, looking at the sort of timeline and history, we've been able to really capture the market share on digital assets in terms of like lending and borrowing, and that has been like the big success for us in becoming the largest DeFi protocols. And one of the moments that like really felt good was a couple of years ago when actually Aave really grew to become like a bigger than centralized crypto-backed lenders at some point. And that was a really big milestone for us because we sort of started at the same time back in 2017 building lending against digital assets. And now going forward, obviously, we think that the space will grow also with RWAs and tokenization. So the native assets will keep growing, lending against Bitcoin and Ethereum and further, especially as banks and institutions are actually adopting more custody solutions and custodying digital assets. And the way we built the Aave V4 protocol was in mind that in the future, maybe you want to lend against ERC20s as today, ERC71s, but also you might want to just lend against a collateral that is sitting in qualified custodians or BNY and so forth. So I think this is for us particularly a big opportunity to transition from being a lending protocol to a credit protocol and being able to tap into opportunities that exist in traditional finance and fund those opportunities and sort of taking the liquidity that is aggregating in on-chain and then channeling that back into the real world and funding opportunities.
Okay, so I know that for the launch, you're doing kind of a limited launch in the sense of you have certain pre-approved spokes or credit liquidity or credit strategies, and then you have Chainlink as the oracle. If you think forward in terms of over time, once you have the full launch, can you explain a little bit in terms of what you guys mean with a hub and spoke model, and then the shared liquidity pool? The ability to set up new strategies, and then the ability to tap that liquidity pool. How will that work? And how do you see the non-crypto native kind of lenders or borrowers or people who are seeking credit using that?
Yeah, I mean, the DeFi lending typically has a challenge, right? So you can either be very capital efficient and then that means that you pull a lot of the liquidity, or the other side of the spectrum where you segregate risk as much as possible and in the cost of capital efficiency. And Aave historically has relied on the pooled model because that allows a better user experience and also capital efficiency for the users. In the sort of biggest challenge is that when you have new use cases and new markets that you want to deploy with dedicated risk profiles, you have this challenge of actually seeding the liquidity of these new markets. And typically how lending protocols have solved that problem is through incentivization or paying for seed liquidity. With Aave V4 hub and spoke model, the liquidity is actually sitting in the liquidity hubs, and the liquidity hubs are giving credit lines to these so-called spokes, which have a configuration of what collateral can be used at what collateral factor, so how much you can borrow against the collateral that you are depositing into that hub and spoke. So what we're basically created is this ability to reuse liquidity that is already established in the protocol and fund new use cases. And for a lot of the builders in the space, what it means is that we can actually inject liquidity into new use cases and new innovation without actually having the problem of bootstrapping liquidity. For credit use cases and channeling value and channeling credit towards these new use cases, it means that we can create spokes that have custom logic. For example, lending against real-life credit can be consumer loans, business loans, or institutional loans. Or the previous example where collateral is just stored somewhere else than in on-chain. And I think that that is sort of like an optimal way to scale decentralized or like on-chain lending into new use cases without crashing into this liquidity fragmentation and bootstrapping issue.
Got it. And in terms of these, the credit lines you mentioned being extended, how does that decision-making process work, and how is the risk assessment done for those credit lines in terms of how much to extend, the cost of the credit line, et cetera?
Yeah, the credit lines is still, the risk assessment is still based on the Aave's governance model. So obviously risk managers are assessing all the risk parameters and signing off, and then there is obviously the process of getting these parameters live. So there's also an opportunity to actually create completely permissionless hubs and spokes to institutional use cases, and I think that might be very interesting. But Aave as a system, why it's so successful is because a lot of the parameters are pre-vetted and the markets are pre-vetted. So you can't really list a collateral that is maybe has risk that basically the Aave as a system would not accept based on the risk assessments. So there is a sort of a multi-layered process how collateral or new hubs and spokes can get listed and deployed.
Got it. And how once you've had that spoke established, how does the price exploration work?
In terms of the interest rates or?
Yeah.
It's really interesting that the pricing comes from the parameters that are in the spoke, but something that we did really differently in Aave V4 is that normally when you borrow from Aave, typically whatever is your collateral composition, you're going to pay the same borrowing cost. Let's say if you're borrowing USDT, you might pay a particular rate like 4%, for example, on borrowing. With Aave V4 model, it also introduces the ability to add so-called risk premiums. So depending on the collateral that you are bringing into the system, you might pay a different price on that collateral that is reflected in your total interest rate. And why this is really useful is because you can start pricing the borrowing costs within the protocol based on the collateral composition that the user has, meaning that those users that have less riskier collaterals are able to have a better rate within the system, and those users that are adding additional risk will basically pay for that additional cost. And it's also interesting for RWAs, which might be more harder to price from risk perspective. It might have some other nuances where, when it comes to, for example, liquidations, and you can price them more accurately.
And how does this tie in with, for example, Horizon, which I believe was launched as part of Aave 3.3? Is that should that be seen as a precursor, like a sandbox ahead of this full V4, where it's kind of now Horizon's kind of out there for eventually everyone to do these type of products, or is it still remaining there, and is it a separate, isolated vertical still?
Yeah, Aave Horizon is a version of Aave that has small tweaks to use permissioned assets as a collateral. That means that you could use securities as a collateral while borrowing stablecoins. So we're using the exact same infrastructure that works with the native crypto assets, lending against Bitcoin and Ethereum, and reusing that system into lending against traditional tokenized assets. And that's actually a very interesting value proposition because you are able to lend against a traditional risk profile. And for borrowers, its ability to actually access 24/7 liquidity directly on chain. And Horizon started a little bit over half a year ago, and we topped over $500 million in market size. And Horizon is what we think how a lot of the RWAs will get utility on chain by becoming a collateral and becoming more productive. In terms of Aave V4, what it means is that we will have at some point a Horizon hub, and that also gives us more flexibility because we can attach different spokes into Horizon hub where these are different asset classes. So that can be, for example, equities, it can be credits or other tokenized assets. And that gives a better risk management tools for Horizon and better ways to deal with RWAs as a collateral instrument.
Got it. And I think one of the very interesting things about, or the huge potentials of V4, of course, is to bring in more institutional capital, because you now kind of have the setup or the infrastructure to do it. What do you think what will it take to get institutions? I'm sure you've had conversations ahead of the launch, and obviously post-launch we'll have a lot more. What will it take to institutions to really come in into the on-chain credit markets? Like, what is this the infrastructure they need? Like, what are they waiting for anything, or is it just kind of a process that you see that has started and it just kind of will build with time?
No, I think there's a lot of institutions that are thinking about RWAs, and obviously collateralization and lending is the next step after you tokenize, because that creates productivity for tokenized assets. Also, I believe that you have to go towards institutions and really guide them the benefits of using on-chain and DeFi. And I think there's a lot actually happening at the moment, especially on the lower side of the risk curve. I do believe that a big tokenization opportunity is actually infrastructure, an asset that aren't really traded, doesn't have a trading environment at the moment. Because if you look at equities, for example, they are, they have a good places to trade, and also you can borrow against your equities relatively easily, not exactly all parts of the world, but I think there's a bigger value proposition on finding assets that are maybe traded in OTC or are assets that do not have the same liquidity profile in the existing world, and tokenizing that and bringing as a collateral. So RWAs are really fascinating because it's such a wide spectrum of assets that could be considered. And obviously, like, it just takes time to figure out like which one of these RWAs actually become interesting strategies for DeFi.
Okay, thanks. I have a lot more questions for you, but I see we're at time already. Congrats again on the launch of V4, and I know there'll be a lot more content coming out for people to go through. And obviously, I believe Aave Pro is now online too, right? So people can go and try V4 directly too?
Yeah, V4 is available at the moment. Obviously, it's launched yesterday, and we built a completely new interface called Aave Pro, and really catered for existing and upcoming sort of like DeFi users that want to use lending and borrowing on chain. And obviously, if you're thinking of integrating Aave, aave.com/build is a really good dedicated page for that. And we have a great documentation on what Aave V4 is, how it works, and especially if there is kind of like interesting ideas how to expand the protocol or proposed any kind of new use cases. We're always happy to hear more of that. And yeah, and thanks for having me here. It's been a pretty nice discussion.
Thank you, everybody.
Thank you.